Hello and welcome to Women's Financial Empowerment Group. I'm your host, Ruth Agbeloso. If this is your first time here, please subscribe to this channel and hit the notification bell so you'll know whenever I upload a new video. Also, please like this video and share it with your friends, and you can leave a comment and let me know whether it was helpful or whether there's something else that I could have added or something that you would like to see me do a video on. I really appreciate your feedback. If you've been here before, thank you so much for your support. Please go ahead and like this video and do all those wonderful things because this video really needs your support. Before I get into today's topic, I just want to issue my disclaimer that I am not a financial advisor. A financial advisor will be able to give you specific information about your situation. A financial advisor will be able to direct you to what stocks that you should invest in or other asset classes that you should invest in. So this video is just for entertainment or informational purposes rather. So that is my disclaimer. Now, I will be talking about the steps of investment, and this video will only cover step 1. So please come back so that you will be able to see the other steps that I upload in future videos. Step 1 is your investment plan. What your investment plan is the what, how, and how often of investing. I will cover the what first. Your portfolio. What your portfolio is, the asset classes that you will be investing in, and how much of those things you'll be investing in, such as stocks, bonds, REITs, and there are so many others. I will only cover those 3 in this video. First thing is stocks. When it comes to stocks, you're going to want to consider whether you want to invest in U.S. funds or international funds. Of course, U.S. funds invest in U.S. companies. International funds invest in international companies. And it gets a little bit more complex than that, but that is the basic gist of it. Next, you're going to want to consider whether you want to invest in small cap, mid-size cap, or large cap funds. Just to give you a quick info about that, small cap funds cover companies with market capitalizations that are less than $1 billion. And of course, the larger the cap is, the bigger the market capitalization. You can also invest in emerging markets. So those are markets that are not fully developed, but maybe one day they will. But right now they don't have all the standards that they should be meeting. But they also have their positive and their negatives. It doesn't matter which one you invest in, all of them will have their pluses and their minuses. Next, you're going to want to have bonds. At least that's what a lot of financial advisors advise, to have at least 10% of your portfolio towards bonds. In particular, U.S. savings bonds, because they have the lowest risk as far as today goes. So again, low risk doesn't mean no risk. But in today's market, a lot of people are hesitant to even invest in the stock market. And if you are one of those people that are still very hesitant, please go ahead and watch my video for beginning investors with little money, because in that video, I cover ways that you can just invest a little bit of money. And there's also a free PDF of my ebook that you can get for watching that video. I will link that video somewhere here and also down below. You also want to consider adding REITs to your portfolio, spelled REITs. It's a way to invest in real estate. I like this type of real estate investing because you don't have to actually own property. What you're doing is investing in commercial property. So when they make money, you make money as an investor. I think it's an excellent way, and there are so many companies out there. So I feel like it's a really good way to get in to real estate investing. However, there again are risks involved with that. So I just want to let you know that for sure, that whatever you decide, there are risks involved. And if you're looking at the market and thinking, wow, prices have gone down, that's what we call a correction. And with a correction, people who invest on a regular basis feel like it's a great opportunity to invest because you get in at a lower price. And history has told us that when the stock market goes down, it doesn't stay down. It eventually comes up. So when it comes up, that's when you earn money. That's when you make money. So if you get in on a low rate, if it's the prices are really low, then you have more of a chance of earning a lot of money a lot of return on your money. So you definitely want to consider getting in right now before the prices go way up. We've definitely been seeing some fluctuation in 2020 because of COVID. For some reason, we thought that it was going to go super duper low, and things have definitely dropped, but they also have fluctuated. So I personally think it's a great time to jump in and get started. As far as the how, there are several investment vehicles that you can use. One of them I've covered in a previous video, and I'll link it below, is Acorns. And if you sign up, you get $5, which is excellent because with them, you can start with a very low amount of money. So there's less risk involved in that. Use my affiliate link and we both get a piece of that pie. Robinhood is another one that I use personally. I think that both of those are just really great for investing when you're a beginner and you just want to get your feet wet and just see how this whole thing works. I will also link them below. They give a free stock when you sign up. You don't get to choose what that free stock is. For me, they gave me Facebook, which is awesome. And then when you sign up, I'll also get a free stock. So my link is below. If you want to try them out, go ahead and do that. There are many other investment vehicles, and I will cover some more of them in future videos. So please come back. Please like this video, subscribe if you haven't, hit the notification bell, and come back so that you can see when I upload a new video. Thank you so much for watching, and remember, change your mind, change your pocketbook. Take care.